Welcome back for the Love of Baby Boomers show. We are here with Chris Watson, and he's in mortgage. And we left off with talking about reverse mortgage loans. Chris, we have a question. The question relates to the fact that nothing is always like just up. We have qualifications, we have a downside. So if you own a home, does your home have to be totally paid off for you to qualify? And what are the qualifications?
Great questions. Yeah, like you say, it's not all sunshines and rainbows. There are some, for every pro, there's a con when you're dealing with anything. And with reverses, there aren't too many cons, but let's put them out there.
Okay.
For one, no, you do not have to have your house paid off completely, but it helps, especially when we're talking about a loan that uses the home equity that you have. And the equity is defined as the value of the home versus what you owe on it. So if you don't owe anything, then it's all value.
100%. Ooh.
All right. So you want your equity position to be about 60% at least. And then when it comes to your ages, 62 and up, as you get older, the terms get a little bit more friendly for you.
Oh, really?
So the younger you are, the tighter the restrictions can be, and the more equity that you actually need in order to proceed. Again, you need to have a minimum of 60%. So if you have a house, I use very basic numbers.
Okay.
Yeah, just for me, because I'm not a math scholar, but I work in mortgage, so figure that. If you have $100,000 is the value of your house.
Okay.
You can't owe any more than $40,000 on it. So you've got that 60% that's available to you to use. And here's pretty much how it works. So you get your mortgage, your reverse, and a lot of times you want to, of course, you have to pay off the forward mortgage that you have on it. If you have one, you got to pay that off completely. And then you use the remainder. And that remainder is what's used to pay you back, whether you take the lump sum or you have the equity line open or you have it with a monthly payment. That monthly payment is based on what you owe or what you have available. And then basically how it's set up is if you do the monthly payment, which is, I believe, the one of the strongest tools you can have in retirement, then the amount that you get is based on how old you are at the time that you apply and how much equity you have. So using
in this
that
case,
example,
being older helps.
It does.
Oh, yeah, boomers. Y'all hear that?
Right. So another cool tool when it comes to these reverses is you don't have to own the home yet in order to take advantage of this. You can do a reverse for purchase. So how that works is, of course, you need a large down payment. But because we're talking about boomers and the fact that they have so much equity right now, it's perfect, especially if someone who is now a baby boomer has raised a family. They have a house that say it's 4 bedrooms. You got stairs. And then as you get older, your joints change and you're like, I don't know if I can do these stairs anymore. It'd be nice if I had a house.
And don't have 2 flights of stairs.
There you go.
Basement with the laundry.
You know?
Bedrooms on the 3rd floor. Sound familiar?
Oh, yeah. Oh, yeah. So in the case of the person looking to downsize, because the family dynamics has changed, the neighborhood's changed, you want houses with a little bit different amenities. You could do that. You could sell your house, which has a ton of equity if you've owned it. You sell that house, and now you've got a large down payment to make on the next one. I talk to a lot of boomers over the...
My. You talking to me. You are talking to me.
I talk to a lot of boomers, and the saddest conversations I have are the ones that are gearing up to retirement, and they're like, okay, I know how much Social Security I'm going to get. I know how much retirement I'm going to get from my job, which may or may not be a lot. And I try to use that to get them for a forward mortgage, and they're not able to afford the next house that they really want. And I feel like if you're in your golden years, your twilight years, you should get exactly what you want. You worked hard enough for it.
Absolutely.
But again, those sad conversations go, well, I can qualify you for this amount, but they look for a house and they can't find what they're looking for.
That's the part.
Either it's not in the right location, because you want to be close to family at least, or it doesn't have the right type of house. You may want a rancher with a yard and a garden and all that, and you're only able to
small yard.
Right. If that, and you're stuck with a small yard, or you're stuck with a townhouse or something that's vertical, and you've got to climb the stairs, and the folks are like, nope, I don't want that.
Exactly.
A reverse can help you get that, especially if you currently own one. If you own a house now, you sell the house and you intend to make a lot of money on the sale, you can use that as a reverse for purchase. As long as you're able to put down at least 60%, then you've got the opportunity to go into that house with no mortgage payment for the rest of your life.
So 60%, you lost me at that point. That 60% is coming from your pocket.
Right. Whether it's cash accumulation, retirement account, or in the best case scenarios, you've got equity in the house that you're selling.
Oh, so the equity is, okay. The
Yeah.
60% could come from the equity.
Right. So I don't want folks to think, if you are in a situation as a boomer and you're in a house that you have a large equity position in, you don't have to stay in that house.
Oh, Lord, have mercy. Talk to me.
If that house
Talk
is
to
not
us boomers.
it's not fitting your current lifestyle and you need something different, you don't have to stay in that house. You could sell that house, use that equity, the proceeds from that sale, to purchase your new house with a reverse mortgage and have that from the jump.
Boomers, get your pens and papers out. Chris Watson is talking. Talk to us. Go ahead.
Right. So I like to incorporate that into the framework of what I do for my people, just as a retirement strategy, because a lot of folks aren't hearing it. They're only in the past year, we'll say 2024, only 9% of the purchases that were done with reverse mortgages. Not purchases and refinances. 9% of the transactions were reverse. But again, boomers make up a large percentage of the market. We're talking, for purchases, 42% of the purchases were done by boomers, and then 52% of the sales were done. And I feel like a lot of those situations where folks selling their house to get another house, downsize or whatever, and they're getting a different house that they really didn't want because of the options out there being limited because of inventory shortages that we're seeing. So I feel like
housing out here is hard, I understand. And I've started looking myself. It's not a whole bunch to pick from.
Right, right. And, another thing, I don't want to jump into a political topic, but
do it. Go ahead. This is a radio show. Do it.
Yeah, so I was with my brother 2 weeks ago, and we were riding through Northside of Richmond, and riding. We took a scenic route through the neighborhoods and everything, and I'm looking through the neighborhoods. I'm seeing a lot of older homes with older residents. They're either in the yard, sitting there on the porch, or just having conversations with neighbors. And I think about how neighborhoods get gentrified.
Yes.
And dealing with what I do and who I talk to on a daily basis, you'll have situations where I get a call from a grandson, and they're like, hey, I want to buy my grandfather's house. I live there currently, and grandfather is getting up there in age, or my grandmother's getting up there in age, and she wants to leave me the house, but there's a mortgage on it, so I need to buy it from her. And then I pull grandson's credit, and
it's not good enough.
Exactly. So he doesn't qualify on his own. Meanwhile, grandma's living in the house. There's a mortgage on it. She has to keep working because she's got to pay the bills. Or she's relying on her grandson to contribute and pay rent.
Mm-hmm.
That whole situation could have been avoided. One strategy I've been trying to introduce to a lot of people, as many as possible, is if you introduce a reverse mortgage into that scenario, grandma could potentially stop working because she's getting money into the house instead of having to pay that mortgage.
Mm-hmm.
You want to leave your house as a legacy to your son. This mortgage that you get is not. See, one of the misconceptions that come, and let's talk about the cons, because people like to associate reverse mortgages with, hey, a friend of mine got a reverse and their house was taken from them. Mm-hmm. And that
there's
couldn't
a
be
story
further,
behind there.
couldn't be further from the truth.
Yeah.
If you have a forward mortgage like the ones I do primarily, or reverse, and you happen to pass away while that loan is open, right, someone has to pay it, whether it's your family member or not. A lot of times it ends with the house being sold. If you have a forward mortgage and you sell the house and you pay off the mortgage, and then the kids get the proceeds, right, which is great. The same thing can happen with the reverse. Same exact thing. You're still dealing with a balance owed at the end of the day.
I understand, though, that there's a time limit on that balance, like a year or something.
Yeah, you get a year, which is a long time. On a forward mortgage, you don't get a year. Basically, if once someone passes away, the company, the mortgage lender, is going to be reaching out saying, all right, so who's responsible for this now? Let's set up an arrangement. Either you're going to pay this thing off, or heaven forbid you miss a payment, and then you have to deal with the potential of foreclosure and everything. And it's ugly either way. But part of the retirement strategy I try to put together for folks, especially when we're considering a mortgage or reverse mortgage, is to make sure that you have a plan in place. And we do this with either a will, or you have a directive or something that's in place that says, when I do inevitably pass, how is this house going to be deeded? What's going to happen with the rest of my assets? Because it's a super important conversation to be had. And a lot of people don't want to even approach the topic of passing away, but it comes.
I have a question when it pertains to the will.
Yes.
Okay. A lot of people have maybe one child.
Yes.
Does it matter? Do you need a will even though you have one child and, no husband or wife?
That's a really good question. Do you need one? No, but it makes things exponentially easier. If you have a directive that is kept up to date, that says this is what I want to happen with my estate when I pass away. And a lot of times it's keeping it talking about houses and the wealth transfer that happens when you pass. When it comes to your real estate, you want to make sure that you specify exactly what's going to happen with this. So with the reverse mortgage, what you're able to do is that mortgage that's remaining, you've got a couple of options. You could either sell the house, which most kids do. You could refinance it and then make it into a forward mortgage that someone then currently pays on. But the best strategy I like to give people, especially if you choose to have a monthly payment as your reverse mortgage option, is to couple that with life insurance, with the savings that you have from not having to make a mortgage payment anymore. And then you're receiving money into your budget.
Wow. Go ahead.
Get you a life insurance policy.
Yeah, make more money.
Yes, indeed. That at least covers the value of your house. So then when you do inevitably pass away, your child then has the option to either pay it off with the life insurance money, sell the house like they were going to do anyway.
Chris Watson.
Well, and then you're not losing wealth. The wealth stays in your family.
It does. Yeah.
And to avoid the gentrification, if you want to keep the house, then you keep it.
We're going to be talking again, okay? We definitely going to be talking again. So what we down to? 2 minutes? Let's see. 2 minutes.
All right, so another quick point. A lot of times when you're dealing with, especially boomers, you got folks that are 60 plus, their children are grown, and they tend to have children too. A lot of times, you don't want to pack up your family, get them out of their school system or whatever you've grown accustomed to as a child to move into grandma or grandpa's house. So a lot of times when grandma passes away, the house gets sold anyway. Or if it doesn't, and you've got life insurance that covers the value of that house, you can keep it and then rent it